and welcome you watching the newsroom right here on ET Now. I'm Ajay Sharma. Well, the earnings season is flowing in thick and fast, and right now we are talking about Motilal Oswal financial services numbers, and Mr. Raamdeo Agrawal is joining us to discuss the numbers. Mr. Agarwal, let me clarify that some of the people actually on street are looking at your consolidated numbers, but if we look at your operating metrics, that has actually shown a very sharp improvement, and understandably so, being a capital market oriented company and one of the leading companies in that, you must have captured the entire momentum. But talk to us about how segments have been this quarter.
Good afternoon. Motilal Oswal as a capital market participant has to be seen at least on the quarterly basis. It has to be seen only on the operation side of it, because that's where we have a control, that's where the execution is there. And the investment book, which is mark to market, that will keep fluctuating from quarter to quarter. And on a 3-year, 4-year basis, you can see what is our experience. So what happens is that about 75% of the book value is in the mark to market kind of situation, and that gives us about 18%, 17, 18% compounded return for last 5, 10, 15 years. So that's one part of it. But quarter on quarter, it can be positive, it can be negative. So the real thing to watch quarter on quarter is the operating side of it. And operating side has been this is a really one of the best performance with over 90% kind of a growth year on year for the quarter. And broking, of course, has broking and wealth management have been in the capital market segment, have been one of the best performing kind of a segment of our businesses.
That's why I clarified, Mr. Agarwal, for our viewers to understand that operating metrics should be seen and not the mark-to-market one that gets captured and consolidated. It actually doesn't give the right picture. If I were to look at your segmental performance, capital market, wealth, 68% improvement in capital market, almost 80% in wealth, private equity and asset management also up 20 and 30% each. Talk to us from here on. Do you see the momentum continue for next couple of quarters? What is the visibility of the various segments you're seeing right now as we stand?
See, capital market is all about how the market is expanding. If you look at the demat accounts between January 20 and December 21, in 24 months, the demat accounts have gone up from 40 to 80 million. That's about 40% compounded growth in the just the number of clients. And then the trade per client and revenue per client and profit per client, everything has gone up. So we are adding, I'll tell you, 17, 18, 19. In those years, we were adding per year. In 12 months, we used to add about 1 lakh customers. Today, we are adding, this quarter itself, we have added about 0.6 million customers. So I think it is an unprecedented boom in terms of client addition, expansion of the market. And if you look at the NSE turnover, you must have seen the STT number. It is year on year 57% increase. So it is, I think, virtual. What has happened in last 2 years is quite a remarkable thing on the capital market side. And I think we are headed from a 80 million customer base on a basis of about 3.5 million per month. We are headed for about 150 million in next 2 years, or maybe even less than 2 years, because the LIC issue is there, and that itself can add 20-30 million additional demat accounts in very short while. So I would think that we are headed to double again in next 2 to maybe at max 3 years. So I think the buoyancy in the expansion of the market, new client addition, and operating leverage for the businesses is going to continue for, I would think that for next 3 years at least.
Mr. Agarwal, I mean, if you, after your experience of over 30 years, see buoyancy to continue medium term, there must be reason to it. I know that Motilal Oswal is also putting a kind of a strategy in place, which is a phygital kind of a strategy. You're not only going deeper into the parts of the country, but also upgrading your tech capabilities and all of that. And you had a digital day. So talk to us about how both the strategies are helping you garner more customers. Your acquisition is at a very healthy, fast clip. 9 months is showing 50% surge in acquisitions.
Yeah. So, we have taken a stance that digital, markets are going to be expanding more on the digital side. And actually, the whole business is digital, whether it is a digital with advisory or without advisory. So when you do it without advisory, it is purely digital because there is no intervention of any of the advisors. So we think to make money in the market, because our motto is to help people make money in the stock market, not burn themselves. So if our motto is to help them make money in the stock market, you need help, hand holding. You need a lot of advisory. You need a lot of research. And after that also it is tough. But still, at least if you bring the investing culture, because the economy is going to expand, a lot of savings are going to come in the market. So it's an opportunity for us to serve the customers in terms of helping them make money in the market. And that's where the advisory piece comes, and that's where the digital thing comes. Now, digital, my sense is going to be about 25 to 20% or maybe even smaller in terms of turnover, but the value added will be a lot more. And there we are seeing less and less competition. And on digital side, more and more competition is coming, and more players are coming. So we are saying we'll stay in digital, and we have enough. Actually, there is enough for everybody right now. The pace at which market is expanding. So we are doing what we can do, and that's how we are strongly positioning for the transaction business. And on top of it, eventually, as we go along, I think the cross selling of the value-added products like PMS, mutual funds, deposits, and the AIFs, and whole lot of stuff, insurance and all, that will ride on the advisory product. So that's how the funnel will be built. And my sense is that it is going to be very interesting when the fixed income has collapsed and the participation is increasing. So both coming together, expansion of the market is going to be quite sustained.
Right. Mr. Agarwal, out of all the segments of your business, where are you, the top management mind share is actually being devoted most right now to develop right now, and which is also showing the maximum traction?
So actually, all the businesses are led by a competent CEO, and CEO, one is the tailwind and second is the competence of the CEO. But I think some of the businesses like iBanking, which was kind of extinct just 3 or 4 quarters back, that's coming back very strongly, and you are going to see in Q4 and following quarters even bigger traction. Then private equity is looking like, I mean, having a huge tailwind thanks to expansion of the market, again warm market, that we are able to raise one of the largest fundraise of about 4,000 crores in a very short period of about 6 months. And with I mean, there is a tailwind collection itself. So those things are going to have a dramatic impact in next year, 22, 23. When you look at our landscape changing, of course the broking itself will keep moving the way it is moving. We might try to gain some market share, but some of the other businesses like iBanking, private equity, then wealth management, these have now follow-on effect of the expansion of the market. And my sense is that those are the businesses which will have a larger impact in the P&L. Though the driver of the core business, I mean core of the thing, which is 55-60% that is broking, that I think will continue to do so.
But you know, we also seeing that a lot of competition now developing in the asset management side of the business.
Yes.
One is heightened competition. Many of our fund manager friends themselves are floating big AMCs and gobbling up other AMCs and all of that. Plus, the PMS side of the asset management sector is coming up aggressively again, and the passive side where margin profile is slightly lower. So how are you tackling all the three changes happening in the asset management business?
Yeah. So passive side, we were amongst the first to start our ETF business way back in 2008, and we pursued it for 4-5 years, and then we had kind of said that market is we are way ahead of time in terms of ETF, and market is not ready. But in last 2-3 years, it has picked up well. So here we are, I think, amongst the largest foreign ETFs to be distributed in India, led by Nasdaq and S&P 500. So yes, so that business is going to pick up, and so there is no performance issue in that. But in active management, mutual funds and PMS, I think performance is a big thing, and it is again a performance. I would say a lot of it is to do with the style. What style is in favor at what point of time? So we have had little challenges in last 2-3 years. So what happens is that when your style is in favor, you get tons of money, and there is no dearth of money. I think there are more money than what you can manage. So I would think that it is not about the market share in any of capital market business, because capital market per se, the way it is expanding, the economy is expanding at say 11-12% nominal. Your savings are growing at maybe same 12-13%, but the share of the financial savings, because of the collapse in fixed income in equity side, is growing at maybe 18-20%. So there is enough and more for every player. The issue is that how competent we are. So we are focusing more and more on competency building rather than chasing market share.
All right, Mr. Agarwal, we'll let you go on that one. Thanks so much. Congratulations once again and good luck for coming quarters as well.
Thanks.
All right, let's take a short break. On that note, more news and updates on the other side. The market looking strong, 250 points on the Nifty, almost knocking the 17,350 mark. We'll come back in just a second.